Good morning. It's me again, and here I am, but not with my Dunkin' Donuts coffee today. This morning I got a cafe latte with hot cream from my local cafe. I am Kenny Polcari, your host of the party, and today is Wednesday, June 8th, 2022. And here's what you need to know. The retailers are warning again. Target, the first one right on board. Janet Yellen telling Capitol Hill yesterday that we should expect inflation to hang around for much longer than expected. The Fed is now in a blackout period. But is Janet the canary in the coal mine? Is that what we're going to be hearing next week from Jay Powell? Oil now trading above $121 a barrel. Hello, knock, knock. Markets remain in a state of confusion. And what do we have for dinner tonight? I'm giving you the chicken cutlet Parmegiana like I promised you yesterday. Okay, so Target warns of threats to their profits again, right? Remember 3 weeks ago after they missed their earnings, they lowered their guidance. And then yesterday, they made sure to make it clear that they're warning you again. They're canceling orders from vendors, and they're going to be forced to offer, discounts in order to clear unwanted goods. Well, of course you have to offer discounts to clear unwanted goods. Why would anybody pay for something that's unwanted? So of course they're offering discounts. What's interesting is, though, they're not offering discounts on the things that you need, right? Just on the things that nobody wants. Look, during the pandemic, when everyone was stuck at home, the government was sending you money whether you needed it or not. There was a rush to buy all that stuff. Patio furniture, athletic wear, pillows, and other home decor stuff, right? And now that the world is open and you're not locked down, people want services and necessities, right? They want to travel. They want to dine out. They want to work out. They want food, and they want gas. And if you walk around your local Target, you're not going to find any deals on food or cleaning supplies and soaps and detergents or stuff that you need. But if you need more outdoor furniture or another polyester tracksuit, you are in luck. And so it went. The whole retail sector taking it in the gut in early trading. As the bell rang yesterday morning, Target fell 8%, TJ Maxx down 4%, Ross Stores down 3%, JW Nordstrom's down 2%. The XRT, the retailing ETF, lost 3%, taking the broader market lower in the first few minutes as the cable news channels dissected the headline. And Andy Ross Sorkin, what would this mean? Was this a new crack in the foundation, or was it just what everybody already knew? My sense is that it just causes more confusion, at least for yesterday. It was not that much of a concern because after about 5 minutes, the panic was over and traders and investors took all the stocks up. In fact, the XRT ended the day up 0.7%. And then we had Treasury Secretary Janet Yellen telling us that we should prepare for a prolonged period of inflation. Wow, we've gone from transitory to prolonged. Remember, Fed voting members are now in their blackout period, so do not expect to hear anything from them. So they sent Janet out to inform the global public square, suggesting that this is what we might hear next week from JJ. Recall that Friday we're going to get the May CPI report, and there's lots of speculation around what that's expected to be. And if that's not enough, the World Bank cut the global growth forecast while raising the idea that many countries are going to face a recession. Imagine that. And then you would think that all this good news would leave markets vulnerable and weak. But you would have been wrong, at least for yesterday, because by the end of the day, investors and traders took stocks up. The thinking is that this is not really new news, that this maybe has already been priced in, right? We've been talking about a recession. We've been talking about global concerns. We've been talking about this. But is it? At 4 p.m., the Dow was up 265 points. The S&P added 40. The NASDAQ gained 115 points. The Russell rose 30. And the transports added 18 points. 10-year Treasury held steady right at 3.003%. Oil rose another 1% to end the day at 119.66. The VIX falling further, suggesting that, hey, look, there's nothing really here to worry about. Nothing to see. Move on. Energy, which I've been screaming about for nearly 1 year now, has by far been the best performer yet again. The XLE rising 3% yesterday, taking that ETF up 66% year to date. But when you think of energy, you can't just think of ExxonMobil, it's up 72% year to date, Chevron up 56%, Halliburton up 32%, Slob up 65% year to date. You have to think outside the box and include names like Comstock Resources, CRK up 161%, BTU up 200%, OIS up 75%. Now, when these names are up, they can keep going higher as demand for energy continues to be strong. Another sector outperforming the broader market is metals and miners, and we've talked about that before. The XME up 28% year to date, while names like AMR are up 194% and Steel Dynamics up 45%. And while the broader S&P sectors, while the broader S&P sectors are under pressure, right? Consumer discretionary down 24%, communications down 22%, tech down 18%, real estate down 18%, industrials down 8%. This morning, we're learning that the Atlanta Fed GDP Now forecast is suggesting we might be on the brink of a recession. Yesterday, the tracker their tracker cut the second quarter annualized GDP estimate to 0.9%, down from 1.3% just last week, inching ever closer to negative territory. This after the first quarter GDP remains well in negative territory at minus 1.5%. Now, the traditional definition of a recession would be 2 consecutive quarters of negative growth, but that's changing. The National Bureau of Economic Research tells us that they are defining a recession as a significant decline in economic activity that is spread across the economy and that lasts for more than a few months. And by that definition, you could surmise that we are already there or getting closer by the minute. In any event, do not expect the more seasoned economists to buy that definition, right? They're going to stick to their old definition. But in any case, it is what it is. And again, the question is not if, but when we go into a recession. And that might be what's causing U.S. futures this morning to be under some pressure. At 6 o'clock, Dow futures were down 135, S&P's off by 15, NASDAQ down by 25, the Russell off by 7. Again, it goes to the total confusion argument. One day it's good, nothing to worry about. The next day, the storm clouds are building and everyone needs to panic. It's ridiculous. The only eco data point today is worth watching is mortgage applications. And if you notice, they have been in decline for weeks now and are expected to be lower again today as mortgage rates remain elevated, causing monthly payments to rise. And in rising prices, add in the rising prices for food and energy, and now you've got an even bigger problem as consumers now have to make choices. And guess what? Mortgage apps fell by 6.5%. Just what I told you. Oil, up again today, rising $1.60 to trade at $121.10 a barrel. And this is despite the fact that the American Petroleum Institute reported an increase in crude and oil products. Demand from China being credited to the most recent surge in prices. There's also a story that Norwegian oil workers are planning on striking next week, and that's going to raise the risk of a shutdown, taking some Brent oil off the market, which by default would raise demand for U.S. West Texas Intermediate. The Energy Information Agency is also set to report inventory levels at 10:30 this morning, and by all accounts, it is not expected to change the narrative very much. Meanwhile, global crude supplies remain tight as Western sanctions on Russia hamper Russian exports, and that's adding to the move and the push higher, right? Just concerns because demand, guess what? Demand is not slowing. I suspect, and I have been saying, that there's going to be continued back and forth, right, with the path of least resistance lower over the next couple of months as investors and portfolio managers attempt to find clarity, a sense of direction, and whether or not the Fed can manage to navigate that soft landing. To be clear, though, lower again does not necessarily mean a collapse. I still believe that 3,800 is a level of real support. Will only change my mind if the fundamental story changes, right? Over the next couple of months, next couple of weeks, CPI, PPI, once we hear what that has to say, then there's always room to change your mind. But right now, I'm good. European markets are also a bit lower after being up yesterday, so they too remain a little bit confused. One day it's good, the next day not so good. This morning, they're all down about a half a basis point across the board. European investors are also awaiting the US CPI data on Friday, which may give them a clue about what the European Central Bank just might do tomorrow when the ECB makes an announcement, and as well as in the weeks ahead. Remember, inflation across the Eurozone has surged to all-time highs, and the ECB continues to stimulate. But that's expected to end tomorrow when they make this announcement, right? So European investors are also sitting kind of tight, waiting on the edge of their seat what they're going to say. The S&P closed last night at 4160 after testing as high as 4164, just below the most recent highs of 4175. I continue to believe that we remain in that very tight trading range of 40.75, 41.75. This morning's action suggests that more churn, but no reason for it to break out or break down as we await Friday's CPI data. And while it's beginning to feel a little bit better, I'm still not convinced yet. I told you that. I remain on the cautious side of this argument. Estimates for more downside action do suggest that 3,800 should hold, right? But there are the outliers, economists, analysts out there that are calling for an S&P as low as 3,200 before this is over, citing Fibonacci retracement levels and DMARC indicators. And just to be clear, that would be an additional loss of 21% for the S&P that is already down 13% year to date, something I do not see. Unless, of course, the data suddenly turns ugly, which it could, but it's not something that I expect that it's going to do. Is it going to remain kind of soft and weak? Yes, but ugly, there's a difference in that definition. Sit tight. The CPI report is only 2 days away. The PPI report is 5 days away. And the Fed meeting results are 7 days away. So lots going on. We remain in the broader trend line. Support resistance range of 3,800, 42.75 is the broader range, with that tighter range that I noticed that I noted above. Okay, so what's for dinner tonight? Well, I'm going to give you the chicken Parmegiana because I gave you the sauce yesterday, and I promised you I was going to give you the Parmegiana. All right? It's also chicken. Anything Parmegiana is a classic Southern Italian dish that originated down kind of, south of Rome, Naples, all that area, where tomatoes and meat sauces are a staple in the Italian diet. Because if you go north, it's not so much. It's more Korean, very French influence. This part of the meal, the chicken Parmigiana part, should cost you probably about $25 to make. You need the chicken, the mutts, and the breadcrumbs, because you already have the sauce, right? You made that yesterday, so you already spent the money making the sauce. So for this, you're going to need thin sliced or pounded thin chicken breasts, right, which is the classic case. But you can also use boneless chicken thighs as well. You need eggs, flour, seasoned breadcrumbs, olive oil, and fresh mutts. You want to begin by rinsing and drying the cutlets and then just patting them dry with a paper towel. You want to scramble 4 or 5 eggs to make the egg wash. Now you want to set up like an assembly line, right? You want to have a plate of seasoned flour, salt and pepper. You have the egg wash, and then you want to have the seasoned breadcrumbs, right in a line like that. You want to dredge the cutlets in the flour, then dip them in the egg wash, and then put them in the seasoned breadcrumbs on both sides, making sure that you cover the cutlet well with the seasoned breadcrumbs. That's very key. You're going to put some of the meat, in the meantime, you're going to take some of your meat sauce you made yesterday, put it in a pan just to heat it up. So put it on simmer. You don't want to boil it. Just get it heated up, right? And how much? Well, use your head. You got to figure out how many cutlets you're going to make, right? Now, you want to preheat your oven to the broil mode. Just put it on broil so it gets nice and hot. Now, using a large broiling pan or Pyrex dish, add enough olive oil to cover the bottom of the pan and then some, right? You want to put it in the oven to heat it up under the broiler. You need to pay attention to this. Do not leave the oven, because once, you have to test it. When the oil gets hot enough, and you test it by tossing a few breadcrumbs into the oil to see if they sizzle. When they do, pull it out, add the cutlets. You want to put the cutlet on one side, flip it over, so now the oil's on both sides. Do that till you fill the pan, put it back under the broiler, and broil it until they're a nice golden brown color. Then pull it out, flip them over, and then broil the other side. Now, once you're done doing that, just turn the oven to bake 350. And you want to place the cutlets now that you've taken out after you broiled them. You put them aside, you're waiting till you finish doing them all. Now you put the oven on bake. Now you want to take the cutlets, put them in the baking dish. You want to cover them with a slice of fresh mutts and then take a ladle of the tomato sauce and put it all over the chicken cutlets. Not too much. You want to drown them, but you want to put enough that there's sauce there, right? Put it back in the oven at 350 because you want it to bake, only because you want the cheese to melt. Remember, the cutlets are already cooked. But you just want the cheese to kind of get all melty and mix in with the sauce. While you're doing that, you're going to make a big mixed green salad, something easy. Dress it with red wine vinegar and some olive oil, salt and pepper, and oregano is all you need. I'd put, maybe I'd put romaine lettuce, and I'd put some scallions, and I'd put red onions. Love red onions. And cherry tomatoes. Maybe cut them in half, cherry tomatoes. Put it all in there, mix it, season it, mix it all up, and then when you serve it, you're going to serve the chicken cutlet Parmigiana, and then you're going to serve the salad, right? To this, I would drink whatever you want. You could go either way with this. You go white, you go red. Now, it's summertime, you go rosé if you want. But I wouldn't drink something really heavy. I'd drink something a little bit lighter. I prefer to drink my white wine with this Pinot Grigio Santa Margherita, which is always one of my fan favorites, right? It goes down nice and chilled. It goes down easy, and it works perfectly with really almost anything. In any event, look, the day's just getting started. The bell just rang. Have a great day, and until I see you tomorrow, take good care.